All right, guys, this is the very last entry model video that I have for you guys. And after this, you're pretty much going to have every single thing that you need to start trading these exact concepts in the Forex market and the indices market. Now, this next strategy is also a Forex-based strategy. You can use it on indices, but I would just stick to what I've already shown you guys with looking at, the 1 minute, 2 minute, 5 minute, and finding your liquidity sweeps, your fair value gaps, or your breakup structures. Mixing it with time and price, guys. That's what I would do. Now, when it comes to Forex, usually I'm camped out on slightly higher time frames, but for the most part, like when you get into the actual New York session, and if I had to pick one time frame that I like the most, it's probably the 15. Like if I could only pick one time frame to ever use again for the rest of my life, it would be the 15-minute time frame, because I feel like you can get the best of both worlds there. You can get longer term trades, you can get shorter term scalps, you can get pretty much everything on that time frame, guys. So this is where I find the most clear setups, I would say, in terms of like looking for a bias coming into New York session. So let me show you guys this for an example. So this is Euro USD, and this is coming up into Thursday. So we're coming into Thursday, guys. And on this day, we did have news. And I'm going to make another video here in just a second about news. But my opinion on news is that news is the excuse. Some people have rules that they don't trade with news. That's totally fine. I don't have a rule like that. I am okay trading news if I find a very clean, very high probability setup that meets all my rules. I'm going to be risking the same as I normally risk anyway, so it doesn't really make a difference to me whether I take a win or I take a loss, because my plan is my plan, and I'm not going to deviate from that. So, but if trading in the news is problematic for you, then just don't do it. It's total. There's nothing wrong with that. I think you need to find whatever. Take what I'm saying and take the parts that you like and leave the rest. Take the best, leave the rest. That's how you should treat everybody's model, everybody's advice, because at the end of the day, you still have to find what works best for you. And what works best for someone else might not be what works best for you, okay? So, again, just take that all with a grain of salt. But here's how the OTE model works. Now, even though you can find this all in the 15-minute, obviously if you panned out to the higher time frames, you would see even more prevalent liquidity sweeps. But here's something to note, and this is what I would see looking at this chart right now on Euro USD, is on the 15-minute time frame. What sticks out to me is a couple things. One, I already see this massive punch right through these lows, and then what happens? We get one more aggressive, puncture to the downside, I guess, before a huge run to the upside. But looking at this, we can see what? We can see all these relative equal highs just left sitting up here, right? They're not all equal highs. We've got this one high right here, but we've got a high, a high right there. We got all sorts of liquidity just resting up here. And if we were to look back, we see all sorts of reason for this to run. More liquidity right there, fair value gap right there. So we've got a lot of reason for price to want to push up into these levels, right? So looking at this, we know our bias is that we've already got a liquidity sweep. We've got a great target that we can shoot for, and we're coming into that time and price window of, again, I'll mark it between 7 a.m. Central for me, or 8 a.m. Eastern, to 10 a.m. Central for me, 11 a.m. Eastern. So marking this up. 15-minute time frame right here. If I were to just extend this all the way up like that, then that would be the window of time that we're kind of expecting this trade, or the trade that we want to play out. And looking at this price range on the 15-minute time frame, OTE, swing low, swing high, which at this moment is right here. Where's OTE? 61 to 78 fib. Could you enter off of just the fib alone? Yes, you could. Is it ideal? No, it's not. You would want confluence. So what do I see for confluence? I see two things. Fair value gap right here. Breaker block right here. This is a failed order block with a fair value gap inside of it. Pretty amazing. Right in the middle of that OTE. Pretty amazing. So what am I doing? I am setting up my trade. Long position. Let's go ahead and drop it. We're not entering till 7 anyway. So boom. Let's just put it right at 7. And then stop loss. You can do one of two things. Stop below here. 21 pips. Or what you could do is you could put it below this breaker block structure right there. So this is what I would do personally, just to have a better risk to reward. Boom, just like that. It's below the sequence of the fair value gap. So you kind of have two things going on right there, right? You have the fair value gap sequence. You have the breaker block sequence. And you can put your stop loss right below both of those. It really should not get below there, and you're below the 78.6 OTE. So that would be how I would play the stop loss, guys. If you're somebody that wants more breathing room, by all means, if you want to just extend it, feel free. But that is how, if I have structure like this, that's how I play it. If I did not have structure like that, then would I do this? Probably. Just full transparency. So that's what I would do. With that, let's actually go ahead and just make this a little bit lighter. So it's still there, but it makes it a little bit easier for us to see this. But as price comes into the beginning of New York session, we still got that same swing high intact, so we don't got to change that. Price comes down, boom, taps that order block, or taps that breaker block, digs a little bit deeper into it. Okay, great. So any limit orders that didn't get picked up here got picked up here for sure. Okay, and then we're in the trade. Now let's say, where's our take profit one going to come? For me, my take profit one would be this order block right here. I would just do take profit one there, take profit two up there at this swing high. And then if you wanted to, you could leave a runner. This is already over a 1 to 3. So boom, let's just go ahead and play this out. Wow, literally, I didn't expect that. 2 candles, boom, full take profit hit. And it actually did poke above these highs as well, sweeping that liquidity. So boom, that was targeting opposing liquidity, and that got hit for OTE. Another example here on USD CAD before we close this segment off. So what we see right here, we're in the heart of New York session, but we see 2 relative equal lows right down here. So if we play this out when we wait for a liquidity sweep, boom, there's our sweep of liquidity. Let's go ahead and just drop this down to, I don't know, like the 2-minute time frame. And let's see if we get any signs of a potential trade. So price pushes, and now we've got a fair value gap right here. And let's go ahead and just see where we get a low to form or a high to form. So boom, price comes up, we break structure. We got a high right there. OTE from that low to this high. Look at that. The close of that fair value gap is the 61.8. So what can we do? We can take an entry right off that 618, anticipating that price is going to come down, close this fair value gap, right? Which is also below equilibrium. So if you wanted to, you could enter off this as well. All truth be told, if it were me, knowing that this stop loss is literally only 7 pips, I would be A-okay entering right at that 50% and not 61.8. But just for sake of it, you know, we can actually just say that we entered off the 61.8 for the OTE concept, and you're just seeing other things play out with it. Now, when it comes to finding a target, I would just run this back up to these highs right here, because you can see that price is starting to obviously break down. So take profits, you know, take profit 1, I would put it at probably this high right here, because we got a fair value gap inside of this breaker right there, or that order block. So that would be a take profit 1, and then final take profit would be this high, or that'd be a TP2 at least, and then final take profit would be up here at this high. But it doesn't matter, because our plan is to continue to just pay ourselves as we go. So let's just play this out, see what we get. We're on the 2-minute time frame here. I'm not sure what it looked like on the 1 minute. Price pulls back, boom, we're in that fair value gap, hit that 50. Are we going to hit the 618? Yes, we are. We are going to hit the 618. So boom, you're in the trade right here. Comes all the way down to this order block. Still holding it. Are we going to get stopped out? Not going to get stopped out, I guess. Good news. We can delete this. Keep our chart clean. Play this out. See where we get. Slow market. Boom. Finally take profit. One gets hit. Late into PM session. Finally take profit. 2 gets hit. Take profit 3 gets hit. Nice. So that's how you would use the OTE strategy, guys. Is same concepts. You have a narrative that price is either going to continue one way, and then you use your OTE in confluence with your other concepts, your liquidity sweeps, your fair value gaps, your order blocks, and you find the best possible entry for yourself pertaining to those concepts, guys. So hopefully this helps. These are all of the entry models for the most part that I am using, and I hope that you guys can take something from this, apply it, take these strategies, start using them, start trading indices, start trading Forex. You can use this stuff with cryptocurrency as well, but that is all I have for you guys. I hope you got the value out of this. And before we wrap this up, I am going to make one more video giving you guys some closing thoughts, sending you on your way. But I appreciate you guys for taking the time to go through this boot camp, learn these concepts, master these strategies, and hopefully it helps you become a profitable trader.